Good morning, friends, fellow investors, and those simply curious about the astonishing happenings in our marketplace. I've been asked to cast an old man's eye over NVIDIA, a company that recently captured headlines by vaulting past a $5 trillion market capitalization on October 29th, 2025. Now, a figure like that tends to quicken the pulse, especially among those who might be tempted by the allure of a rapidly rising stock price. But as Charlie Munger and I have always maintained, business is about fundamentals and investing is about buying wonderful businesses at a sensible price. So let's peel back the layers of this AI marvel and see what we find beneath the glittering headlines. The business, a rare bird indeed, but at what price? NVIDIA, without a doubt, has crafted something remarkable. Looking at their fiscal year 2025, the numbers jump off the page. Roughly $130.5 billion in revenue, growing an astounding 114% from the prior year, and a net profit that soared to nearly $73 billion. And that gross margin, around 75%, well, that's the kind of figure that makes even a seasoned value investor like myself sit up and take notice. Most semiconductor businesses don't see such margins. These are numbers more typical of software giants or businesses with unassailable monopolies. This immense profitability translates into a torrent of free cash flow, giving them the means to reinvest and solidify their position. The core of their earnings power, we're told, comes from their compute and networking segment, largely driven by artificial intelligence. Their GPUs, like the Blackwell and Hopper series, are the engines powering this new AI revolution. They're not just selling chips, they're selling the picks and shovels for a gold rush. And by golly, they're selling a lot of them. The moat, a formidable fortress. But is it impregnable? When I think about a great business, I always look for a wide and durable economic moat, something that protects a company from its competitors. NVIDIA certainly has one, and it's built on several pillars. First, their technological leadership in GPU architecture is undeniable. They've poured decades into perfecting these specialized processors for parallel computing. Second, and perhaps even more powerful, is their Q-Day software ecosystem. This isn't just a piece of software, it's an entire world that developers live in. It's the standard, and switching away from it would be a colossal, expensive headache for any customer. This makes for tremendous customer stickiness, a sort of walled garden that gives them significant pricing power. Finally, their deep relationships with manufacturers like TSMC and hyperscale cloud providers solidify their supply chain and market reach. It's not a legal monopoly, mind you, but in the realm of AI training, they are as close as one can get. This unique combination of hardware, software, and deep customer integration creates a competitive advantage that most companies can only dream of. The rocket fuel. AI's insatiable appetite. What's driving this phenomenal growth? It's the explosion of generative AI and large language models. Every major technology company, every enterprise is scrambling to build out its AI capabilities, and they all need NVIDIA's chips to do it. It's a demand curve that seems to defy gravity. They're expanding into complementary areas like specialized networking, Ethernet for AI, and sophisticated software platforms, ensuring they capture more of the value chain. The competition, sleeping giants or nimble rivals? Despite their dominance, NVIDIA isn't alone on the battlefield. AMD and Intel are formidable opponents, though perhaps playing catch-up in the AI GPU race. More importantly, the tech giants themselves, Google with its TPUs, Amazon with its Inferentia and Trainium chips, are developing their own custom silicon. While these custom chips primarily serve their own internal needs, they represent a long-term threat to NVIDIA's pricing power and market share. History teaches us that when a market becomes this lucrative, competition will always arrive, sometimes from unexpected quarters. The $5 trillion question? Why that price and why then? Now let's talk about that October 29th milestone. A $5 trillion market capitalization is an astonishing sum. It didn't happen because NVIDIA suddenly discovered a new kind of chip that day. It happened because of a potent brew of extraordinary financial results, yes, but also a generous dash of speculative fervor and market psychology. The market sees NVIDIA as the indispensable infrastructure provider for the AI era, the foundational layer. This narrative, combined with enormous order backlogs and strategic deals being announced almost daily, created a sense that this company is simply too big to fail or too essential to be cheap. Reuters noted that the market was valuing NVIDIA at roughly 35 times forward earnings at that point. When you look at the trailing numbers, AROI